Hi, it's Mine Crypto here. I hope we're having a wonderful morning, afternoon, evening, wherever you are in the world.
Remember, this isn't financial advice. Always do your own research.
Well, we are early. 100 trillion up for grabs. So we're going to be talking about NXRA, NXRA, and Quant. But first and foremost, we'll look at the crypto bubbles. And as you can see, NXRA is down 8 ranks to 384 and is currently sitting at that just over that 6 cents mark, and current market cap of $42 million with a current 24-hour volume of 383,946. Currently up 0.1% in the hour, down 2% in the day, down 1.3% in the week, and down 16.1% in the month. And we are seeing this across the board, and as you can see, it's quite red, but we're also seeing H-bar that's up quite a bit at the time of recording this video. So we see here Allianceblock, BlackRock's CEO Larry Fink says tokenization will be the next generation for markets. The Allianceblock's infrastructure will support this decentralized tokenized economy. And an article from Forbes here, Larry Fink says tokens are the next generation for markets. If you think of tokens as Bitcoin or pictures of chimpanzees with sunglasses on, you might well think that the man who runs the biggest asset management company with 7 trillion under management is out on a limb. But if you think of tokens as digital assets that can be traded via protocols, you may well agree with me that this view is accurate, credible, and inevitable. Inevitable, he says. It may sound hyperbolic, but I am sure that the future will be tokenized. From the man himself. Not ideology, economics. Mr. Fink's perspective is not, I am sure, ideological. His view of a new kind of financial market infrastructure of fungible and non-fungible tokens that are exchanged through decentralized financial services will provide instantaneous settlement and reduced fees. Tokens are bearer instruments. The token for $100 or for a seat at the Rangers game is either in my wallet, in which case it is mine, or it is in your wallet, in which case it is yours. When a token goes from my wallet to your wallet, it is now yours. There is no clearing or settlement, no reconciliation, no question of authenticity. The idea that tokens are central to the future of finance is not new to other serious players who understand financial markets. He interviewed Jonathan Larson, the head of Ping A Global Voyager Fund, on stage at 2020 Money Asia in Singapore a couple of years ago, and he told me that tokens in finance is a much bigger story than cryptocurrencies, and confirmed my suspicion that the institution of strategies and scenario plans should be updated to take into account the new technology immediately. And he remembers Jonathan's focus on 3 key characteristics that he saw as driving the new asset class: transparency, universal access, and the ability to reduce frictional costs. Now, reducing frictional costs is thus reducing the overall cost of financial intermediation in society is a good thing for all of us, but that point about transparency is also very important. So this is looking very good. And a brilliant tweet here from construction trader ETH. Tokenization will help drive to mass adoption, and there's over 100 trillion in assets ready to be tokenized. He's put Quant, Casper, and Rio, but I add NXRA onto that, are all pioneers in this sector. Act accordingly. So let's have a little listen to this video.
Great, thanks, Zoe. And I think whatever way or whatever definition one wants to put on tokenization, I think at the heart of it is increased accessibility. You know, you said about the huge proportion of the world that is unbanked. Within the investment world, there are a lot of products that are inaccessible to a huge swathe of investors, particularly private investors, retail investors, which they can't currently get. So in many ways, tokenization partially, this is a question for you, Ami, is tokenization helping to solve that because of the underlying fractionalization that it represents? Who kind of benefits from tokenization in the investing world?
Yeah. So I want to start really with where we work within the world of tokenization, because as I described, it's a very wide world. So there's tokenization of digital assets, there's a virtual digital asset, there's money, there's real asset, real securities. So I operate in the real world assets tokenization. So I don't have expertise in the other fields, but the field of real asset tokenization is what Larry Fink was talking about. It's what the CEO of Citi is talking about, CEO of Goldman Sachs, CEO of JP Morgan. My background is actually when I had my VC fund, and I saw the blockchain, and I saw Ethereum, and I saw Bitcoin, and I said, hey, wouldn't it be great if I could put my VC fund on the blockchain? And we did that, and that was the world's first tokenized fund. And that was about 5 years ago. And it was hard to do. Nobody knew what we were talking about. Nobody knew how to buy and hold a tokenized fund. So the fund was small, but what we realized was the technology had huge potential. And I think what's happening right now is that the banks and the financial institutions, the buy side, the sell side, everybody are realizing that the same underlying technology that was used to launch things like Bitcoin and Ethereum can also be used as infrastructure to replace very old, aging infrastructure in other markets, and especially in the private markets where there's actually no infrastructure in many cases, or no integrated infrastructure, where a lot of things are done manually. So we're talking about tokenization not so much as a future model for revolution, and which I think will come. But we're talking about a real use cases which are more, I would say, immediate, where we're taking infrastructure and deploying it within banks to add a lot of value to the entire value chain. A lot of value to the asset managers, a lot of value to the banks and to the wealth managers and to advisors, all the way down to the investors themselves. To your point, we're not starting retail. We're starting with institutional investors. We're starting with private banks and with private assets and private markets and so on. And the reason is exactly, investor protection and all of these things. They're just not there yet. We're at the very, very early stages of that. But these markets are so big. It's trillions, hundreds of trillions of dollars market. There are pockets of use cases where tokenization brings immediate and instant value. So we're working on, with JP Morgan, which is one of our investors, we're working on tokenizing repo market, intraday repo market. So that's a use case that can do billions of dollars a day. So that's a very clear use case where you can work on it. Other people are working on tokenizing MMF, money market funds, private equity funds, and we do a lot of work on real estate tokenization as well, where I can talk in a few minutes about the values and who gets what and why. But this is basically where we operate within this market.
That makes a lot of sense, and I think what we're talking about here is that the
Real world use cases, tokenization, and they are all talking about it, and it starts with institutions. Wow. And we see this lovely tweet from Gilbert Verdian. The crypto market by the end of 2022 was less than 0.5% of the financial markets. And in 2022, the total regulated capital markets of debt and equity was 233 trillion. Crypto was only 798 billion. That tells me a lot. There's so much out there up for grabs. We just have to be patient. That's it. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research. And remember, please subscribe. Please hit that notification bell so that you don't miss any further videos. All the best, and I'll catch you later.
Remember, this isn't financial advice. Always do your own research.